Good afternoon, everybody. Welcome back to Schwab Coaching. Our next topic is getting started with stock investing, and I'm your host, Kevin Horner. Thank you all for being here today. In the past, in this particular segment, we have provided a series of discussions picking equities for a number of different reasons, considering the fundamentals of these companies, considering the trends in which these companies reside, and of course, talking much in the last few weeks about the when to buy and the how much to buy discussion. And today, we are going to focus on putting all of that discussion together. So I should point out, if this is your first time seeing this particular segment, it's going to be a little bit more aggregate in nature, meaning simply we're going to run through a few steps that some traders and investors may incorporate to deciding when and where to be placing these positions or buying stocks in the market. So we're going to take us through this process a little bit, but if that process of multi-steps is beyond your expectations today, then I want to encourage you to look at the archive for this show on the YouTube coaching channel. You can go back in time there. We've got more than a few videos available for you, but you can notably look at just the last 3 to 4 that I've done and work through the series a little bit so that you can build your base knowledge. And again, today we'll kind of put all of those pieces together and build a list of equities that might be considered for trade opportunities or investment opportunities, but I'll walk you through that process with a little more detail here today. If you're not already doing so, make sure you're chatting there in the chat functionality to the right of the presentation window. We are joined today by my friend and fellow coach, Michael Fairborn. So say hey to Mike. He's going to keep an eye on things for me here so that if I miss anything, he'll address your comments and questions, of course. I do want to bring your questions in because in a demonstration approach like this, your questions are absolutely valuable and welcome. So please do not hesitate to post in here for the show, everybody. Now, let's get to some disclosure so that we can get into the fun stuff here. So we'll remind you that our conversation is exclusively informational and educational. We do not encourage a particular approach or strategy to trading the market today. So what we're talking about is just providing you a few ways, a few ideas that traders might look at evaluating the marketplace and giving you some steps that you can incorporate. But just recognize a lot of this work does come down to us as individual traders. We need to make the determination as to which of these numbers matter and which of those numbers am I looking for from the equities I want to buy. When we're talking about things like a price to earnings ratio, what is my limitation? We're not going to tell you what that limitation is. We just need you to know that there are investors out there that pay very close attention to that. They pay attention to price to sales ratios as well, or book valuations. But my point is, I want you to walk away with some ideas of the things you can choose to focus on, and then need you to do your due diligence and drill in and learn more about that process so that you can build your own strategy to trading and investing in the marketplace. Now, today we are going to talk a little bit about technical analysis as part of our discussion. So bear in mind that technical analysis is just another piece of that overall puzzle. We encourage you to think of it as such. We do not encourage you, rather, to base decisions exclusively off what you see in terms of technical analysis. In fact, as we go to the first slide here, the one we're going to focus on is really just this concept of taking fundamental analysis with technical analysis, combining them together to build a cogent strategy as to how you want to approach the market. So we often will say technical analysis helps us understand the when to be investing in a given either area of the market, maybe a sector of the market, maybe an individual equity within a sector that is doing well at any given moment. But we say that because the fundamental analysis aspect is going to build for us, or help us to build rather, a list of securities in which we would ultimately like to have investment. And the technical aspect of that can keep you maybe from investing in stocks that aren't yet trending properly. And what we mean by that, they could be in downtrends, right? Maybe they're still working through the process of digesting recent weakness, digesting recent news that led to price action weakness. And as a trader or investor, your decision making will be part of that technical aspect, the one that says, well, based on this series of information, this number of details that I'm working with, whether it's the fundamental details in addition to the technicals and the price action, this says that now is my time to capitalize and take advantage of an opportunity. But we want those things to line up. What we don't want to do is take a, pardon the expression here, but a willy-nilly approach. We want to have that process and base our decisions off of an outline or a game plan for how you want to approach the market. And so starting with fundamental analysis is a good spot. In fact, what we're going to do today is kick off with a look at Schwab.com, and we're going to just create a list that's going to give us something to work with, and then we'll take that list into Thinkorswim desktop and we'll start evaluating it from the technical aspect of things. So I'm going to give you a multitude of steps as we work through things here today. The first is going to be by pulling up the Thinkorswim, just to highlight that we can go directly into Schwab.com right from our Schwab.com link at the very top here, of course. So by clicking that, it's going to bring us to our summary page. Now here I have already placed us, if I can find my page, there it is, on the research and U.S. markets page of the Schwab.com website. Now, for our purposes today, I'm going to slide over to the research tools and down to Stock Screener. Now, what I like about this page is, yes, I can start right from scratch and build my own immediately, right? I can create all the criteria that I'm looking for. But for many of you, you might need a little bit of a head start, and it's perfectly fine to take advantage of a head start when provided. So let's scroll down and just notice we've got a series of predefined screeners here. And for the record, screener in the website is our terminology. And in Thinkorswim desktop, it is, we call them scanners or scans, but ultimately they are the same, okay? So what we're doing here is just using the freedom that a predefined screener offers us, and then we're going to customize that criteria a little further to help build a proper list for us. So we're going to click on growth at a reasonable price. And as I scroll up, you can see the criteria is laid out right along the top. Now, this is where we can start to customize it a little bit. So if we looked at earnings per growth history, the last 3 years, you'll notice we are 15 to 25%. But if you click on it, you'll further notice that we're saying we only want companies with, this approximate and proper earnings per share growth between 15 and 25%. But that doesn't mean that's all. We could absolutely just say, you know what, show me anything better than 15% earnings per share growth history for the last 3 years. And why would we not, or why would it not default to that? Well, sometimes growth estimates and growth details can be so out of line with expectations, it can skew a securities opportunity, and it might skew your list. So that's why it's not incorporated. And again, I want to remind you, we are not suggesting that these are the criteria specifically, nor the percentages for each of these individual details. What I am trying to do is get you just some familiarity and comfort to make some alterations, make some customizations, and build a watch list from there. Okay, so this one, like I say, is a good starting spot. We are looking at a number of fundamental criteria. As I said, we've gone through a lot of this stuff. We've covered briefly what some of these criteria mean for the company. And again, reference that archive of Getting Started with Stock Investing so that you can watch those videos at your pace and maybe come back if you're finding some of this to be just a little further than what you wanted. So we can also incorporate from here additional criteria of our choosing. So if we wanted to add in the area of the market in which the stocks might reside, we could do that here, whether it be based on an index. Is it a stock that's part of an index, for example, or is it a security that I want to be in a specific sector or industry, which we could absolutely do right here as well. For our purposes, I think it's maybe better to build a list that's a bit more wide in its reaching and in how it reaches the market, right? We want a broader number of stocks. We recognize that not every one of these is going to be primed for us all the time. So we want to simply give ourselves a larger list to look through, and then we can do triage, as I like to say, by just looking at the charts of these. So here we have a list of about 7. It's not a huge list, but gives us plenty to work with. And in this case, the easy thing to do, and granted, I recognize it would be the easiest if I just said, save my symbols and make them available. They're not immediately available from here in Thinkorswim. I can export it if I want to do that to the CSV format for you in like an Excel. But for my purposes, what I like to do is just, hide this, go like something like this and slide it to another monitor. And then I will build a watch list from there. And of course, when I build my watch list, I'm going to do that over here by going into edit. In my case, I'll go to edit the one that I've selected, which is growth specifically. It's part of my personal list. And this is where I would encourage you to make sure you're building individual lists. Okay. So I've gone to growth. I've already loaded and launched a number of equities that might be suitable from the standpoint of fundamentals linked with companies with growth opportunities. Okay. Again, remember that growth stocks aren't necessarily companies that have a large history with us, right? They may be stocks that are, relatively new to market. They might be small company stocks as well. But just, keep some of these things in mind. And again, recognize that we're not talking about specific companies, but rather a process. So, of course, none of the symbols we'll talk about here are recommendations in any way. So we have a growth list built. That growth list that built based on fundamental criteria that I found to be, as an individual, important to me. And again, that's what I want to encourage you guys to do, to spend the time determining in your fundamental breakdown the criteria that makes sense for you from an investment standpoint. And then we can build that in from that technical side. So here today, once I have that watch list doing what it does, I have some options available to me as to whether or not I want to start working from these individual opportunities. The fastest thing for a trader like myself, and maybe I should say many traders who are watching the price action, and that's the thing they pay closest attention to, we just kind of work through the charts and allow the chart to dictate opportunity to a certain extent, right? Because you're looking for something specific. And if you've been watching charts and patterns and trends for as long as I have, you tend to have a real quick understanding of whether a stock is worthy of a longer look or if you just move on. For some of you who've been watching shows that I host frequently, you may have heard me say this before, but my comfort zone really is leaning in and listening to what is an involuntary reaction to seeing a chart for the first time. And some of these symbols are symbols of securities that I don't watch frequently or even come across all that frequently. And so what I like to do is just scroll through the list and, okay, and hear things that come out involuntarily, like look at this. Doximity has gapped higher and held its gap since doing so. That stands out. I'll put a line there. Maybe I'll put a pin in that and think about it for a little later down the road. I might have to come back to that one. But that's ultimately what I'm trying to do. What stands out? What catches my attention from the standpoint of the trend and the chart? And why do I do it like that? Or why do some traders consider doing it like that? Well, we can find, this is something we talk about quite a bit as traders, bias plays a huge role in our processes, unfortunately. And our job as traders is to reduce and minimize those biases. And sometimes if you are wanting to own a stock, you will find yourself paying too much attention to the price action. Meaning you look at it and say, well, if I zoomed in, could I find this to be short-term support? Should I even be considering it? The point is, if you have to look for too long, if you have to work more time, work harder to determine whether you should be placing a trade or not, well, odds are you probably shouldn't be placing a trade, right? Because you already know it. You can take a quick look and see, I got a stock that's either in an uptrend and I'm going to think about it, or it's not in an uptrend. I have no reason to look at this one. I'm moving to the side. Okay, those rules of thumb, those very quick looks and involuntary reactions to those looks can do a lot towards, go a long way toward allowing you to minimize your work, right? Just pay attention to what you see. Don't force anything. Try and be as calm and casual about your about going through these charts as possible. So as we work our way through, I think right now we maybe have seen one that stood out. I mean, a lot of these are showing good pullbacks, questionable short-term trends, stronger long-term trends, which is one of the reasons, great point, Wiley, why you might like alerts. Yeah, this is a great reminder. I'm simply going through at this point. Now that one stands out. I'm simply going through and looking at the chart and seeing if there's any reason to maybe give it additional consideration, an additional deeper dive, right? But you can absolutely set alerts to do just that. And I'm going to show you how we can use the scan tool to do this as well. So some of you might find that we build a list here of, what is this, about 12, 15 stocks. That might be too small a list for you. And that's okay. If you want a larger list, equally good. And one of my favorite things that you can incorporate with a very large list relative to the work we did there on Schwab.com, building out a substantial, let's say 50, 60, 100 stocks that fit your fundamental criteria for investment, then we can use the scan tool to find those opportunities. Yes, Wiley, we can use the alerts to do it, and we can do that on a stock-to-stock basis. Notify me when ABC stock moves this direction through a trend or through a moving average or through a given price. We can also tell it, hey, I've got a trend line here. Let me just draw one in as an example. If I thought that this had to hold as support, but I wanted to be, I wanted to make sure that I was aware if it broke down from here, you can add an alert, creating an alert based on a drawing that you've placed in there. So if this crosses, for example, to the downside, I want to be notified. Notify me when this triggers by playing a sound. Send a push notification to my mobile. These are a great way to be on the ball when your individual stock makes a move you're expecting or considering could happen, right? Now, that's perfect if you've got a small list, 10, 12, 15, 20 stocks that you can do this for as necessary. But I think a lot of you might be of the belief that you have this much wider collection of individual stocks for consideration. And then we can take the scanner and instead of scanning in the entirety of the market, like all symbols or all stocks, or as I have it set here in the S&P 500, you can actually scan your personal list exclusively. So while I have my growth list titled here, ready to go, it's only going to scan those 15 stocks. You know what? This is where some of you would say, I would love it if I had 100 stocks that made sense, and then I could rotate through a series of scan opportunities. Maybe stocks that are, as an example, stocks that are in an uptrend that might be oversold, working in a short-term time frame, maybe against a 20-day moving average. Or some of you investors who want something longer term. Maybe you want to review your list of equities, but instead of working in a short-term period, you want to see the stocks that might have retreated to, maybe tested support at a long-term zone of support, like, as an example, a 200-day simple moving average. So some of you are going to be a little more long-term and investor-focused, and some of you might be more short-term and trader focused. Nothing wrong with either one, but my job is to let you know that both are available as a process, and you can absolutely rely on Thinkorswim Desktop to aid you in doing this. So let's take, I'm going to go back to my scan function at the top, and I'm going to load a scan that I had personally created, titled it Uptrend Oversold, and I've got 3 of them here, everybody. So what we're looking for are stocks that are already in an uptrend, and I'll remind you, remember when we talked about technical analysis in prior segments, we talked about understanding the trend, what is considered an uptrend, what is considered a downtrend, what's a sideways trend, and that process, right? So we talked a bit about that. So what we're looking at here are stocks that are in the midst of an uptrend, but are off of highs. They've pulled back by some percentage or 2, as I've designated a proper moving average. We're going to select that of the 50-day simple moving average here, and scanning exclusively in the S&P 500, that's going to give us a list very different from anything else we're doing. Let's see if any of the stock, and granted, we looked at all these symbols, but let's just see if the growth one that I've built here has any stocks in it that the scan picks up as having retreated and been in an uptrend, retreated to a 50-day moving average. Doesn't look like it. So we're going to go back and scan in the public S&P 500. Okay, and I'll hit scan here. And we should probably get a few results on this one, I would think. Well, there we go. We got 5 to work with. That's not terrible. So let's take a look at a couple of these just from the standpoint of whether my scan is truly valid. Let's look at American Express. Okay. Well, there you go. Pulled back right to a 50-day moving average and seems to be working to hold it there, everybody. So that is so far that stands out as a potential opportunity from a trend standpoint. But again, if we were putting this all together and saying that, well, this growth list was what I was looking for, it has to be one of these stocks on my list, well, then I'd have to know that it was setting up properly in my process. Here, if AXP were on your list and your process were to find a trend, commensurate with this approximate intermediate time frame, 50-day window, pretty consistent, right? That's a pretty popular, often utilized moving average. That gives you a chance at this point for traders to consider a bullish trade. And again, a trade, maybe not necessarily a longer run investment, because a 50-day moving average in the longer run is still kind of intermediate in length. It's not a 200-day moving average like down here. But if you were a trader who said, well, if this trend is going to continue, I'd like to buy AXP as long and keep it as long as it maintains its 50-day moving average, well, then some traders might get started right here. And they might even look below the low we just made yesterday as an exit strategy, meaning if they were wrong about this timing, wrong about stepping into a position in American Express right now, they might sell if the stock were to trade on a closing basis under that 303 level that we just tested yesterday. And the reason for that is just one of risk mitigation. I'll remind you, as we talked previously about how much to buy, if you're trading rather than buying for the purpose of holding for a long window, if your goal with buying a security is to be a seller of that same security down the road, you're already thinking like a trader. So here, the trader might say, well, I don't like the idea that it could if it closed under 303, because it might come down to another level of horizontal support from here. And that could be, what about this low in here, this last one? So that might be more than is comfortable for a holder of AXP or a new trader of AXP, right? Because right here, that's we said 303. And if it had to fall to this next level, that's 288. That's a 15-point move from this about 5%, right? So we'd have to make note of that. And again, the trader would have to say, yeah, I'm comfortable with that type of move for the number of shares I'm carrying, or I'm uncomfortable, right? There's a big difference. Remember, if I say I have comfort of I could lose, let's say I could lose $500 on my trade. Okay, I'm going to bring us back to the discussion we had last Thursday. If I said that my downward strategy, my risk tolerance was $500, and I'm looking at this today, and I am a buyer at let's just round down for ease here, everybody. I'm a buyer at 308, and I'm wrong at 303. I'm a seller at 303. That's $5 a share in loss. I could own no more than 100 shares, right? Now, heads up, 100 shares is not cheap, everybody. 100 shares of a $300 stock, that's a $30,000 investment, okay? Just making comment here, that's probably not going to fit in a properly developed risk tolerance process. But I have to point out, if you said, I'm comfy losing $500, you could buy at 308, be a seller at 303, own 100 shares. But if you said, I'm a comfortable seller, I can only lose 500, but I don't want to hold it only to 303. I want to hold it as long as it holds 288. Well, now we've got $15 of risk, okay, not 5. And that means that I can't own 100 shares. I could probably own about 30, maybe 33, right? Because 30 shares, excuse me, at $15 of potential downside, that comes out to $450 of approximate risk. And that means I can't own nearly as many shares as I wanted if I was going to adhere to an exit up here. Okay? So last note, remember, when we talk about exit strategies, you traders will commonly employ stop orders to address that. Remember, your stop order doesn't guarantee a price. It guarantees that you can be traded out of that position once triggered. You get a market order to sell, but we can't guarantee that price. So if we bought at 308, closes today at 305, and we've got our stop at 303, we are cool heading into the morning until the stock opens at 290, and that opening trade triggers our stop, and then we get a market order to sell at close to 290, probably not close to 303, unfortunately. So you have to be aware of that, right? So I just talked you through that. I know I didn't give a level by level process. I hope I gave you a sufficient thought as it relates to building and conceiving of that position for AXP. I want to then move off of this one, and let's see if we can find one in the longer term window as well. Because, and again, I want to share these, by the way. Let me go back to the scan. I saw a request to show this. So let's go back to the scan. And I do have an ability to share this criteria with you. So I'll share the scan. I'll remind you that our scans cannot be, they are not guaranteed in any way. They are also not proper, and I can't guarantee the timing of the scan. And I can't give you an encouragement for use, but I can encourage you to maybe play with the scan a little bit. You'll notice I've got a number of customized studies in here. In this case, uptrend and oversold. What I used to determine this was just stock is showing short-term moving average above longer-term ones. So we've got the 10-day above the 50-day, the 50-day above the 100-day. We've got a stochastic designation in here. And then we've also got the last trade is greater than the 50-day simple moving average. And so, you know, our hope is that we're finding stocks that are in the window of nearing their 50-day simple moving average. That's what this scan has been designed to do. So let me just share this in the chat there with you all. So you have it. I'll put this in the show notes for those of you who might be watching this in the archives, everybody. So you can be on the lookout for it. All right. So let's try another one here. Let's go to load the personal query utilizing that uptrend, oversold, and the 200-day simple moving average. A lot of the same criteria, except that our last trade is in the vicinity of that 200-day here, okay? So we're going to go ahead and hit scan. And again, we're scanning in the entirety of the S&P. And so what this is telling me is that we have nothing quite ideal matching up with our scan here on the 200-day. We still have a number of stocks. If I did something like this, let me highlight this. Here we go. So here, the close needs to be greater than the 200. So last trade needs to be above the 200. But yesterday's low needed to be below the 200. So that's the testing calculation. And I'll admit, I'm not certain on this one. If I didn't review all 500, of course, there's a possibility that the scan isn't giving me exactly what I was hoping for here. It could be as simple as maybe eliminating the stochastics. And that tells me that we've had a pullback. So, well, let's just do it for the heck of it. Let's eliminate the stochastics and let's see if we've got anything that may have come down to the 200-day recently. It doesn't look like it. Okay. So we'll move off of that one because that one doesn't seem to be providing us what I was hoping for. But what I was definitely wanted to get to highlight here was that conversation around the what, the when, and the application of placing an order here for that. So you know what, Wiley? Thanks for asking about that. Actually, I think there is one in here that incorporates the Horner rule. Let me just take a quick look at my scan query. Yep, there it is. So let's just see. So what is this? This is a scan that is designed to provide an indication of whether a stock has moved, validated an area of support, in this case, from utilizing a 20-day moving average, and showing stock where the 50-day is above the 200-day. So we're looking here for short-term trend analysis, suggesting that its recent price action is above our longer price action, right? So if the 50-day moving average is above the 200-day, it means we have an uptrend in the 200-day period, but also in the 50-day period. And that, the more time frames in which we have an uptrend, the more it could be considered to be bullish. So that's what this was designed to do. Let's take a look at that one. See if we have some answers on the list, and we sure do. We got 3 of them here, and this is again working against the 20-day. So I'll just point that out one more time here, everybody. Here is the criteria for this, and I'm gonna have to thank one of my friends on Twitter here for a lot of this assistance. Close from 2 bars ago is above the 20-period simple moving average. Close from, I think one of these is supposed to be 3 bars ago. So the idea being 3 days in a row closing above the same moving average. So here we've got it in twice. If I edited this, so I've got it at offset of 2. Yeah, we'll say 3 here. So let's see, actually, I may have selected here it is. This is it, 3. 3 under the close in the last 3 days. So here I'm going to hit save on that. There we go. So now it's closed from 3 bars ago is above the 20-day. 2 bars ago also above the 20-day. And 1 bar ago above the 20-day. So that's 3 consecutive closes above the 20-day. And the idea being here that can validate a break above the 20-day moving average, right? So for those of you who maybe are unfamiliar with the so-called Horner rule, our friend Lee Bull coined this on my behalf after many, many years together, talking about what I call simply confirmation, just wanting as a trader to have confirmation that a trend has broken to new a level of support, right? And a 20-day moving average in this case is what was incorporated. This could be a decent opportunity for more traders who are just more comfortable with confirmation, or maybe want to take a more casual approach to their order entry. Not everybody needs to be the first trader through the door on a breakout. Some of you want that confirmation based on price history, price action. So let's just click on that apple and let's just take a peek at it. All right. So, well, there you go. I think if we drill into just the action from the peak here, everybody, day 1 above the 20, day 2 above the 20, day 3 above the 20-day moving average. And we have a 50-day is where we reside right now, but that 50 is above the 200-day and the 20 is above the 200-day. So again, while this can work for you, you might want to play with some of these customizations. And again, I encourage that. Don't be uncomfortable making changes to these scans. Play with the details, play with the criteria. The biggest reason, how hard would it be? It's not. You can just go right back in there and reload the scan from the base level. Play with it. Make it customized to the details that matter to you as a trader. I think that can be very, very powerful. So yeah, I will share this one with you as well. Now that I've got this one customized, let's go in here and just do one more thing since we're talking about it. So we have the edit here. And just so you know, everybody, this keeps opening on my laptop monitor. That's why I keep bringing it in. So again, this one is for the 20-day, okay? So maybe you want to do this. You could call this Horner Rule 20-day simple moving average. Everything we're looking at is consecutive closes above the 20-day moving average and today. Okay, so that's option 1. Option 2 is you come in here, you edit, and you just change, instead of the 20, you change the 20 to a 50 or to a 200 or the 100. Whatever moving average works for you, that's perfectly fine. So let's go ahead and share this one with you all. And again, I will remind you that when we share scans like this, we can't guarantee the scan for its accuracy nor its timing, and it is not an encouragement for use. There you go, everybody. So add that one if you'd like, and continue to play with it. Now, let's look and see. Let's go ahead and spend the final few minutes here building a trade based on criteria we want to be incorporating here with our process. Here we have Sempra. Now, this made our list, and you can see why. I think yesterday it closed right at it. So the 20-day yesterday, let me expand on this, because that looks pretty questionable, right? At the close yesterday, the 20-day was 82.87, and the close was 82.93. So it was 6 cents above the 20-day. That's why it made the list in our scan today, everybody. So if you're looking at this one, and you may be feeling like your opportunity resides to start a new position here. Some traders would work at the 200-day and say trades under the 200-day would kick them out. Some traders would say, but Kev, you've got some lows in here that took out the 200-day. Should we incorporate those? And a lot of traders would. You would look to trade under even these lows or potentially even the one that's extended lows, right? The one down here. So, as always, I'm not going to tell you which of those is right. I'm not going to know. But we want to know which one matters to the trader starting from scratch, right? So, let's go forward with a few key components that we've been utilizing in our discussions. We're going to use our scratch pad. We're going to keep our tolerance to a $500 maximum loss scenario. And let's go to this level right here. We're going to call it 81 from our, just for ease of math, okay? So what do we have to work with here, everybody? We've got entry at 84, exit at 81. That is $3 of risk, okay? $3 per share. And we're then going to take our maximum risk of $500 and divide that by 3. Oops. And we will do some quick math on that. 500 gives us 166.67 shares. Now, I'm of the belief that we always round down. So let's just go to 160. And we will see that 160 shares will give us about a $13,000 position. Now, that might be a bit much for some traders, but I'm not going to focus on the size of our portfolio. I'm just going to focus today on building that trade. Okay. So the math says we can support 160 shares with an exit in the neighborhood of 81 if we are wrong about it. And then we would hope to lose no more than $500 on our trade. Okay. So how would we build that in? Well, the nice thing about Think or Swim is that it allows us to build it with a defined exit strategy, both above and below the market. One of the other key components we suggested and discussed previously, rather not suggested, but covered that traders might look for is willingness to risk a dollar should come with willingness or an opportunity to make at least $2. So if we're risking 3 to the downside, we got to look to make about 6 or more to the upside. So that last peak is around 87. Okay, that's not sufficient. So in order for this to be the opportunity that a bullish trader really wants, well, then we got to be targeting somewhere between $6 and $9 from our entrance at 84, which would give us maybe 90. And 90 does stand out as a potential for resistance here. But if you thought you were going back to the new highs or to prior highs, you might go ahead and suggest up here at 95. Okay. So let's go forward as though we were going to go back to the highs. Okay. So let's just, again, suggesting as an example that that's what the trader is thinking about. So we'll start with a right click, buy custom with OCO bracket. So OCO, one cancels the other. And so our entrance is going to be at market, but then our subsequent orders are going to need to be good till canceled. Okay, so first, we know we can own 160 shares for our tolerance. We'll put that in. Notice I click this little button, and then it populates properly the number of shares I'm willing to go with here. So we're buying at market, good till canceled limit sale at our hopefully at 95 if it gets back to the prior high, or we exit at 81 even. Now, some of you would say, but Kevin, I know better than that. I can't put in a stop at a round figure. I need to come beneath that a little bit. I need to get to a number that's less likely to be a stop for other traders. No concerns. Make an alteration. Ultimately, you're going to still be a very close proximity to your maximum loss comfort zone anyway. Just make sure that that's the case and recognize once more, no matter what stop order we call out, what stop trigger price we select, it is a market order to sell once triggered. And so that does give us additional risk. We don't have a perfect order to mitigate our risk perfectly. Okay. So here we go. Buying at market, and we'll have an exit at 95 or an exit under $80.92. Only one of those sides can execute, everybody. You can't execute both. So we'll hit confirm and send. There is my breakdown. There's my total cost, and we are off. And then it gets added to my monitored portfolio. Of course, my example portfolio here, I've got it in unallocated format, but it's ready to go there. So there we go, everybody. So we went ahead and started from the standpoint of building that list. Remember the importance of building a list based on comfortable fundamental criteria that you deem to be appropriate for the stocks you wish to invest in. Build that list, make it a watch list. Get comfortable and confident in reviewing that watch list, but also lean into the idea that the scan tool can save you a lot of that work. If you're a nerd like me and you love looking at charts, you might just find yourself looking at charts all day long anyway. That's a lot of fun for me. It might not be a lot of fun for you. So use the tools at your fingertips to reduce the amount of work that you're devoting to this process. With that, I got to answer a few of these. No, we don't have a survey today. Unfortunately, I would have loved to have seen that. Always value your opinions, everybody. Please follow Mike and me on X at Mike Fairborn CS, at Kevin Horner CS. If you'd like to reach out to me on X, I'm happy to hear from you there. And I'll certainly reply if I can. But thanks for being here, of course. Tomorrow we will reconvene at Market Open for Trader Talk in today's market. I'll be up with my buddy James Boyd. But for now, check out that archive as well. In fact, let me throw the archive into the chat function here for you, everybody, just so you've got it. If you wanted to go back in time, you absolutely can. So thanks for being here, everybody. I hope you all have a fantastic evening. I look forward to seeing you all again real soon.